Hello guys, good morning, good afternoon, good evening, depending on the time you are watching this video. Akiyemi remain my name. In this video, I will be really concentrating in a particular aspect that talks about the Fibonacci and the dollar cost averaging of the Royal Q Autotrader trading system. You know, it's no more news that Royal Q cryptocurrency Autotrader is awesome. It is different from every other cryptocurrency robot in some ways. And I want to point our attention to some of the ways and how to use it effectively. I just want you to understand how this concept works, how Royal Q trading, how the Royal Q robot, how it works, how it picks trades, and how it picks trades, how it ends its trades. In short, I just want to dwell more on this aspect. So I want to give us some backgrounds to this tutorial. We'll be talking about Fibonacci retracement as applicable to both cryptocurrency and forex, and we'll be talking about dollar cost averaging, DCA. Then how these two stuffs are being inculcated into the Royal Q trading system and how you can take advantage of it, just as we are doing presently. When we talk about Fibonacci retracement, there are key levels in trading. There are key support levels. It is believed that whenever market gets to any of these strong support level, the market tends to retrace itself, to bounce back into bullish direction. So from what is written here, Fibonacci retracement level are horizontal lines that indicate where support and resistance are likely to occur. They are likely to occur at these lines, at these horizontal lines. They are basically support lines. And you know, support line could as well be a resistance line. Don't worry about that. They are based on Fibonacci numbers. So those are the numbers we want to talk about now. Now you have seen that the percentages is how much of a prior move the price has retraced. Good. Now, I just want you to have an example of that. For example, let us just click on a diagram so that you'll be able to know what we are talking about. They are being denoted with horizontal lines and with some mathematical interpretation. Now, and they are in percentages. In this place, these are the lines. These lines were actually calculated in percentages. And I'm going to explain to you how this is applicable to Royal Q. That is that. So, secondly, let's talk about, please don't forget this. Let's talk about dollar cost averaging. Dollar cost averaging. So what is dollar cost averaging? It is simply an investment strategy in which an investor divides up the total amount to be invested across periodic purchase of a target asset. Now, what it simply means is this. I'm going to explain to you. For instance, you buy one Bitcoin when the price was $40,000. Then Bitcoin now fell back to $20,000. How many Bitcoin do you still have? You still have one Bitcoin, right? Yes. Then you now buy another one Bitcoin when the price is at $20,000. You now have two Bitcoins, but the price of each of these Bitcoin is no more 40,000, neither is it 20,000. What do? You add 40 plus 20, making 60. You divide it by 2. That is 30. So it means that the average price at which you bought those two Bitcoins are $30,000. So if the Bitcoin now moves from 20,000, the Bitcoin does not need to move to 40,000 before you start making profit. Once the Bitcoin moves from 20,000 to 31,000, you have started making profit. Because that is how dollar cost average means. You bought one at 60, you bought one at 20. The average buying cost is 30. You add this to this, divided by the number of bought. Do you not get that? Now, how is it applicable to the Royal Q? How is it programmed into the Royal Q? Let's go there. If you are new to Royal Q system, after you have made your registration, after you have logged in, and you actually want to trade by yourself, this is what I will want you to do. I said it in my previous video that Royal Q gives us two alternatives to trading. It's either you want to copy trades of the gurus. These guru trades are inside what is known as circle. Click on circle here, in case you want to copy trades. You can see the circles there. I copied this. I copied. I also joined this. So you can see their trade. How do you go about that? Once you join you click on circle, you join. Once you join, click on the strategy. This strategy here, you click on it. Then you click on synchronize strategy. Sync strategy. So you enter the amount you want to start with. For instance, $10. How many pair do you want to copy? How many pair do you want to copy into your account? I might say 1 pair. I might say 2 pair. Anyone. Let me just say 1 pair. Note, profit sharing. You will be charged 1.5% of your profit after the trade you are copying closed successfully. Don't forget, Royal Q company charges you 20% of every profit you make on every successful trade that closes in your favor. So if Royal Q company charges you 20% and you are copying a trade, this very particular guy now is charging you 1.5. That is a total of 21.5%. That is okay now. After all, you just plug and play. You left it there. And this guy analyzed the market and the trades are being copied to your account. You have lost nothing. Coupled with the fact that this software is just $100 in a whole year. So it makes sense to me, okay? But after I synchronize it, you will just click on synchronize it and automatically the trade shows up. But I actually canceled it because I edited it to one shot. I cancel after the trade has been won successfully. After about 2 days, I'm running my own trades myself. Now this is how it works. If you want to run your own trade yourself, this is what you should do. If you have $100, now if you have $100, this is what you should do. Now click on quantitative. You want to trade by yourself, right? Click on quantitative. Once you click on quantitative, click on all so that you'll be able to see all the pairs that this stuff is giving you opportunity to see. You'll be able to see all the pairs. So in this case, I'll be trading Ethereum USDT as an example. I already have 6 trades going on, but for the purpose of this lecture, I will add Ethereum. So you will click on the pair. Then, before that, I will use this opportunity to explain the dollar cost averaging and Fibonacci retracement level. It is called retracement level because that is the level of support or resistance. How do I mean? Let us go there. Once you click on the pair, like Ethereum USDT, you click on trade setting. This is trade setting. Here, you click on trade setting. Once you click on trade setting, before I click on trade setting, let me explain something to you. Okay, let me do that first. Click on trade setting. Now, this place is the amount you want the bot to start trading with. Okay? If you the minimum you can buy from Binance or from UOB is $10 US. The minimum transaction you can do on the market is $10 US. So the minimum here is 10. If you're having an account of like $100, you should put 10 here. If you're having an account of about $500, you should also put 10 here. If you're even having an account of $1,000, you should put 10 here, depending on the amount of pairs you want to trade. We'll explain that to ourselves later. That is that. Then 2, open double position. Please don't enable this. Leave it the way it is. Don't. Because if you click it open, it means that instead of the bot to place a trade of $10, it will place a trade of $20 for you. Why? If I want to place a trade of $20, I would have just typed it here, 20. Do you not get it? So this is just an added advantage from the bot. So don't click it. This margin call limit is 7. Let us leave it that way. I will explain that to you later. Then this whole position take profit is your take profit. This is your take profit, 1.3%. It is editable. Okay, you can edit it to whatever you like. You can put it to 5%, but I leave it at 1.3% to make it easier for me to just accrue the profit easily. So it doesn't mean that the bot is going to take your profit. It doesn't mean that when your trade hits 1.3% in profit, this trade will stop. No. It means that the robot is getting set and getting ready to execute take profits. So whenever your trade hits 1.3%, it will not stop. It will still be trailing up. That is where the trailing stop is activated. So it trails, it keeps trailing up for let me explain to you. For instance, now, you enter a trade here, okay? And your trade now, from here, you enter a trade, it has moved up this way in 1.3%, right? It doesn't mean the trade will close. No. If you are in a very bullish market, the trade will keep going up. Maybe it has gone up to like 5%, okay? It will still be in your favor. Then this market now retraces back to with 0.3%. The trade will be executed. It will close immediately. So you will be in profit of 4.7%. Do you now see it? So that is what happens there. They said, okay, once the trade has retraced, that's why they call it callback profit. Once it is already in profit, and it is the profit in question is above 1.3%, and it is now being retraced by 0.3%, that the robot should stop your trade and keep the profit. Do you not get it? But peradventure, if the trade actually got to 1.3% as it is here, and it's coming down, and it hits 0.3%, the trade will still be executed. It will be closed, and you will have a profit of 1%. Do you now understand this parameter? So I'm taking my time to explain these two to you. I just explained these two to you. The take profits here and the trailing loss. I just explained it to you. Okay? Now, what does it mean by this margin call we talked about? I said this is where what is it called? This is where the dollar cost averaging and the Fibonacci. This is where it happens. In a layman language, we call it martingale, right? In a layman language, you call this martingale. But the way this martingale works, it works in the system of Fibonacci and dollar cost averaging. How do I mean? Now, let me explain to you. I'm still coming back. to all this, the buy in callback. Okay, let me just explain buy in callback. Now, as I've said in the other time, as I've said that, okay, you enter a trade here, the trade move in your favor, and it's sold, and you keep your profit. Okay, you keep. Let's assume that it hit 2%, and you keep your profit. Just assume that the trade closed in your favor. Now, this buy-in callback means that hence the profit has been executed at this level. Either way, if this trend comes back by 0.5%, another trade will be triggered automatically in your. Do you see? It will be triggered. Another trade will be triggered. Okay? Or if as you picked your trade, your profit at this level, and the trend now decided to be going up again. Once the trend moves at 0.5%, another trade will be entered in your favor. Another trade will be entered for you. That is what it means. But in my own case, I don't want it that way. Why should I wait for the trend to go 0.5% before I enter the trade? I've just left some money away. So what I do is that I edit this part and I put it at 0. That's for me. But please, you may not want to do that. I put it at 0 because if my trade executes, for instance, it has gotten to 2, maybe it has gotten to, let's just say 1.3%, and there is a pullback of 0.3%, just as it is there, and the trade closed, and I make a profit of 1%. I don't need to wait. As I'm picking my profit, another trade is triggered again automatically for me. That is what I meant by when I say dig 0. I put it at dig 0. That is how it works. Now, this margin configuration. Now, let me show you something. Click on this margin configuration. How many levels did you see? How many call? 1, 2, 3, 4, 5, 6, 7, right? 7 call, right? Go back. Now, let's reduce this to 4 call. To 4. Okay? When you reduce to 4, click on margin. How many did you see here? 1, 2, 3, 4. Do you see that? Do you see that now? Now, let's take this now. Take it back to, let's take it to 10. When you take it to 10, click on this margin configuration. It will be 10. Do you see that? These are the Fibonacci. These are the Fibonacci retracements. Let me now look at it here. These are the Fibonacci retracements. What does it mean? At 3.5% retracement level or support, at 4% support level, at 4.5% support. This thing has been calculated and has been programmed into the Royal Robot. How does it work? Now, you enter market. Let's say you enter market. Yeah, you bought a coin here. Let me go upward a little bit. You bought a coin here. This level is the level you bought a coin. This 0 level, this x-axis, this junction. You bought a coin here. Let's assume the coin cost you, like say, $20. Okay? You expected the coin to go up, right? But the coin came down. Okay? When it came down for 3.5%, this first one, another market is triggered. It will buy another one automatically. Okay? It will buy another one automatically. Sure, you understand? Now, you bought a coin for 20 USD here. Instead of the coin to go up, the coin came down. The coin now fell by 3.5%. It means that the robot will buy you another coin here. And remember, your initial buy was $10. Sure, you remember that time we say it's $10. Now it means that when it falls at 3.5, you said 2 times, it means it will buy $20. That is 2 times 10. Then instead of this coin, you think it will go up. It now fell down again. It keeps falling down. It now falls by another 4%. What will happen? This robot will buy $40. Do you not get it now? Now let's now assume that this is the second rise bar. Instead of it to rise, it fell again by another 4.5. It will buy $80 for you. That is 10 times 8. That's $80. Now this was your final bot, Abi. This thing, now add your initial 10 plus the 20 plus the 40 plus the 80. How much is that? That is 150. What is average cost? It's going to be 1, 2, 3, 4. That is 150 divided by 4. Because you already have $10 zone the first time. You now have $20, another $20, making $30. You now have $40 again, making $70. You now have $80, making $150. Now, it's going to be the dollar cost average in here is 150 divided by 5. 150 divided, that is 30. It means the average price you have bought this particular coin is $30. It's no more 10. It's no more 20. It's no more 80. It's 30. Which means that if this coin here move, above, the first one was 20 here, you bought it. This thing doesn't really need to move to this level where you first bought before you make profit. No. Remember, your take profit was what? 1.3%, right? Immediately this thing here move for 1.3%, you have already made your profit. So now your profit be because from here to here, the dollar cost averaging will be here in between the two. Sure you get. But because now you have bought a new one here and here, the dollar cost averaging will be the center here. Now, because this is your last position, the dollar cost averaging will be the center here. Sure you get now. Which means when your trend move in your favor and it hit this place, you have already started being in profit continuously. You will be in profit. Even when it now closes anywhere, you will recover all the money you've spent here. Please watch this video again so that you'll be able to understand. That is the dollar cost averaging and the Fibonacci that is really working. So in most of the places we've worked before, I've used CWE and I've used 3 commas. This stuff actually need to come back to where you started from before you start making profit. But in this case, no, it doesn't work that way. Because of the dollar cost averaging, okay, because of the dollar cost averaging that is being embedded with the Fibonacci retracement level, it makes it much more easier. But I really don't set mine like this. I don't have that much of money to play around and to be. You can play with this. Please don't touch anywhere, anything here. Don't touch these percentages. Don't. But you can change anything here. You can. Okay? Now, let's do it. I change this one. These two. I put it at 1. I put it at 2. I put it at 4. I put it at 5. I put this at 6. And I put this at 7. I put it at 7. Okay? Why? That is what I want. I click confirm. and I come here, I put this at 6. So when I put it at 6 and you click back here, they are 6, already 6 here. This is how I want it to be. If my first trade failed, it will buy, and it will buy another $10 here. Okay, it will buy another $10 here, making I've gotten, if my first stake was $10 before, it will buy another $10 here. If it drops to this place, it will buy $20 there. If it drops to this place, it will buy $40 there. If it drops to this place, it will buy $50 there. Do you now see that? Now, what is my dollar cost average in here? This is 90, 100, 130. This is, I've spent a total of 130, but what is the dollar cost averaging? 1, 2, 3, 4, 5. 130 divided by 5. So anything this gives you is your dollar cost averaging, which means whenever the trend starts going in your favor, once it moves at that 1.3% that you set it, you will already be in profit, because it is dollar. It makes it so simple. And do you know what? The trade will not be cancelled. The trade will not be cancelled. The first one here will be executed. That first one that closed would have paid off everything. It would have paid off everything. And as it's going up, you are still raking in profits continuously. Do you now see how the Fibonacci retracement and the dollar cost averaging of this Royal Q works? It works pretty well. Now, let's come back here. I told you now, this, let's come here. Okay, here. You know, now this was the way it is here. This was the way it is. This is how it comes. Now, if it comes like this, if this default, which is all warehouse mode, this is what it means. Now, under this place, you know, we have 7 level. That dollar cost averaging will actually affect all the 7. All. It will work. Everything will be working like that. All the 7. It will work like that. As in the way I've explained now. That is how it will work. Exactly. But if you change this, to sub-beam mode is going to only recognize the first setting, the first 4 settings. Sub-beam mode. Now, the sub-beam mode will only recognize your first 4 settings. It will execute these 4 together. It will find the dollar cost average of these 4 trades, of these 4 levels together. But it will not undo the remaining one separately. It will close this one separately. It will close this one separately. It will close the last one separately. Do you not get it? Like me now, that I said I put mine here to be 6. As I said, I put mine here to be 6. If I put mine here to be 6 times, if you come under the margin configuration, so it means that my sub-in mode will only recognize the first 4. So dollar cost averaging will affect the first 4. But these last 2 here, it will not affect it. This trade will close separately. This trade will close separately. That is what the sub-in mode means. So now I place my own. I place it on sub-in mode. I place it on sub-in mode because I want it. If it gets above 4 level, I want it to execute the last one separately, then be executing the upper one also separately. I want to have more profit. That is what the sub-in mode means. Now, for the mode position profit callback, because I have put this one, if this one is 0.3, I also put this one to be 0.3. So my buy-in callback, I told you, this one is, I put it to 0.0. I don't have time for this one. It's 0.0 to be immediately. So your whole position take profit callback should be the same thing as your sub position take profit callback. Let them be the same thing. Your buy-in callback could be anything, 0.2, 0.5, but me, I want another trade to be triggered immediately after I've taken profit. That is that. Then, this one short. Now, let me just place a trade here. I put this one to be 6. I always put it on to be 0.2. Then I put this on to be 0. Okay? 0. Then I change this, my sub-in mode, to be 0.2 also. Then I go back to my margin configuration to see. You see? This one, I put it back to be 1. And if I want, I may put it to be 2. Put this to be 3. Put this to be 4. Put this to be 5. Put this to be 6. Then have this put to be 7. Okay. Then I click my confirm. That is that. I put this to be 10. I check the gain correct. I click confirm. The trade is executed. No. I have to click on start for it to be executed. Now, I want you to take a look at this place. Then, you remember I have USDT in my Binance. Once this trade is executed, automatically Ethereum will be bought, and I'm going to have Ethereum in my wallet automatically. The amount in US dollar would have been converted to Ethereum. That is how it works. So when you see money leaving your USDT account and you now see the coin you bought, you are having it. That is how it is. You took 1,000 naira to the market or $1,000 to the market. You bought food. Maybe the money will leave your purse to the owner who sold the food to you, who sold the food to you, and the food is not yours. That is the same thing. You use your dollars here to buy Ethereum. So now, this is what now happens. If I click start now, I will not click confirm. It will be executed as soon as, now look at it, it has been executed. The average price, it bought for 10.27. Okay? But now, one more thing. This one shot, look at it. This, if I click on one shot, something will happen here. Look at this place. It means one shot. One shot simply means that once my profit is made at once, this thing, it will not trade again. The cycle will not continue again, except I place another trade. That is one shot. But if I want it to continue continuously, after I take profit and I want this cycle again to continue, I have to click on cycle. Okay? I have to click on cycle. That is what this plays me. That is one. Two, if I am in profit or I'm not in profit, maybe as I have bought now, I expect these things to be going up so that I will be in profit. But it comes down in negative or it goes up in positive. Anyone. Do you get? And I want to exit the market. I'm no more interested. You will click on sell. That is the liquidation. You are liquidating your position. Liquidation, you are turning everything to cash. You are liquidating it now. It means if it is in negative and you click on sell, you will lose money. Do you now understand? You bought one gold. You bought one gold. The price of the gold fell. You still have one gold. If you keep the gold and the price increases, then you sell the gold, you will make profit. But because the price of the gold has fallen, you went ahead and sold the gold at that, you will lose the value of the gold, Abi. That is what happens there. If you click on sell, automatically your position will be terminated. That is one. But if this thing is in negative, as it is now, if it is in negative, if you have any trade that is in negative, and you want to up it, you want to up that trade to be in positive, just as I've explained to you, dollar cost averaging, you will click on buy. Click on buy. If you click on buy, then you will be able to add money. Once you add money to that trade, now let me show you something quickly. Take a look at this. We are in negative right now. Minus 0.17 negative, Abi. Good. Now, let me show you something here so that you will understand very well. Let me show you something here. On this front page, look at it here. Ethereum. The trade I just placed now. Let me look if it is there. Okay. Look at it here. Now, this is the floating loss. Minus 0.034 something, right? Now, let's go back. Let me click on buy. If I click on buy, this place here, please enter trigger price here. I'm going to enter the price I want to add up. I will add up $10 to that trade now. No, sorry. Please enter the purchase amount. I will put $10. So once I put $10 there, amount of margin call, I'm putting $10. Estimate. So I'll just click on. Now, my profit and loss is still minus 0.28%. I want you to be looking at this. If you click confirm, once you click confirm, it will be triggered, and it will affect it. It will reduce your loss. It will bring it up because it is now dollar cost averaging. Now, we have spent more than what? We have spent more than $20, right? Let me see. We have spent more. Let me now go back. Trade setting. No. Let me see. Position. Amount. Okay. We have not affected it. Let's click on buy. Let's put the $10 here. We click on confirm. Please enter the trigger price. Oh, we have to enter the trigger price before it works there. What is the present price? Average price. Current price 2160. Average price 2166. 2160. 2160. 2160. You confirm. So that is how to add money. I don't want to do it. Anyways. So now, I haven't done all that. There is one thing left. Pause. This pause here. This pause you are seeing. If you pause a trade, the trade will be cancelled. But it can be recalled back. Okay? If you pause that trade, for instance now, as we enter this trade here, right? And this trade is already negative here, and we pause it here, and we pause this trade here. Okay? If this trade is going back, we are not going to be in profit because we have paused it. It's not trading. It's just like that. So anytime we come back and we click on trade, it will be retriggered. It is at that place, that position, that price where we click on it to play again, to trade. That is where it will be retriggered. So once your trade is on and we are ready, just allow it. You don't need to pause it. Leave it. This thing I'm telling you, I tried it just for me to know how it works. So this video is a little bit lengthy, just for me to be able to explain one or two things to you, and I believe you have really understood. Should in case you don't really understand what I am saying, please do ask questions. Don't forget to join our Telegram, where it is being taught, where I can mentor you, and it is Royal Q _ MMBM. Please check the description of this video for you to actually see the link to the group. And when you get to the group, use the anybody that invites you to the group. That is the person's code you should ask of. You cannot register in this program, in this software, without being referred. That is just the truth. You must be referred. Anybody that referred you, please use their code. Okay? We work as a team. Everybody, we work as a team. Thanks for watching. If you have any question, do ask me. I remain your loyal guy. Odeyemi Akinyemi is my name. Thank you and God bless you. MMBM for life. Money must be made.